Welcome to ShortView Trends, your morning market hit for Wednesday, 7th of October. What matters today for traders? Well, Trump once again is pushing this stock market around. This time over the last 12, 18 hours, not to do with his health. That's not the news flow that's been driving it more recently. As I say, these past 12, 18 hours. This time it's to do with the negotiations around the fiscal stimulus package. Last night, London time, Trump tweeted that the negotiations were off. The market reacted sharply down over 1% straight away on that news. This morning and later on, it seems he's reopened the possibility of a narrower set of negotiations. We shall see. What's going on, it's difficult to know for sure. No doubt some form of playing politics. Two key observations, though, that are really worth bearing in mind. Firstly, the sell-off on that announcement of that news was actually quite mild, given how much the market had been bid up over the last week or two, a lot of which was purportedly due to the expectation of a further stimulus package. So to sell off a mild 1% and change was actually quite benign, given the news flow and the potential implications of it. Second key observation is, of course, if you look at the chart of the S&P 500 in front of you now, really since the lows in 21st to 25th of September, the index has been making higher highs and higher lows. And that pattern remains intact despite that sharp pullback last night on the back of that tweet on the negotiations for the fiscal stimulus being stopped by Trump. So that's encouraging. The market's making higher highs, higher lows in the S&P 500. That's a very encouraging price pattern. That suggests a building and a continued momentum to the upside. And of course, critically, the S&P is trading around its 50-day moving average now at 33.68 and seemingly just about holding on to that level as a sort of support level that it's been edging up along with over recent trading sessions. But it's also interesting to note, if you get into the detail of global markets and the detail of the US market, that the tech sector, the NASDAQ 100, unlike the S&P, isn't making higher highs and higher lows and is broadly trading sideways in the past 3, 4, 5 trading sessions. You can see that in the chart in front of you now. And in fact, if you look elsewhere in the US market, you'll see that it's some of the more cyclical areas, areas like the mid caps, the Russell 2000, that have been driving this market high. In fact, there's a chart, the Russell 2000 in front of you now, and its price action, its momentum in the past few trading sessions, much better than what we're seeing from even the S&P 500. So the cyclical, the mid caps, the more domestically focused areas of the US market, the non-tech is really driving this market upwards in recent trading sessions. And with that, of course, we've seen the bond yield backing up. And it's not just the States, you can see that globally. If you look around the world, look at some of the Asian markets, for example, Hong Kong market's been very strong since the 22nd, 23rd of September. Equally so has the Korean market. You can see that in front of you now. So there's rotation playing out in global markets. Tech hasn't been leading this last move up from the 23rd of September. It's been led more by the cyclical mid-cap areas of the US and indeed global markets. And of course, it leaves us with the question, where next? Where do markets go from here? And of course, it's interesting, if you look at our models, they were giving lots of buy signals, strong buy signals around the 21st to the 25th of September. Models were giving interesting, strong buy signals, and it was encouraging us and did encourage us to move long at the time. But now, of course, the markets have moved higher, the models have moved higher, and they've been edging up towards their sell levels. But the key here is they're not on sell, and the momentum remains to the upside, and it always pays typically to stay with momentum until you see those models get back onto sell, particularly when you see a market that is resolute in the way it's responding to negative news flow, as we saw last night on the Trump tweet cancelling those negotiations. So as you can see from the model we're putting in front of you now, there's a little bit more upside until it reaches sell. That's encouraging, given it was on strong buy back on September 23rd, 24th. So we think there's a little bit more upside in this trade, in this trend that you're seeing play out now. We're about to start the US third quarter reporting season in earnest with the banks next week. You can see Tuesday and Wednesday, quite a big day for earnings. And I suspect markets will rally into that and through the initial part of the earnings season, as actually the outcomes are benign and interesting and supportive of stock prices. So for full detail on how we're playing this market, please see today's Daily Rag available via the website to subscribers. So what are we watching today? Well, lots of bits and pieces, certain bits of macro data out of the UK. We've got some more house price data. Of course, housing's been strong here as it has in the States and many parts of the the world. So all the housing data is fascinating. In the US today, we got weekly mortgage applications, which will be watched closely as well. Added to that, consumer credit in the States. Consumers have started increasing consumer credit once again, going out and spending on that via that mechanism after the contraction and the paying back of consumer credit we saw in the depths of the pandemic. So that's a key data point as to how consumer spending's going. And then in terms of key events, we've got a bunch of speakers out, including Christine Lagarde once again and Williams from the Fed. And also it's the Fed meeting minutes later on today. So that's it from us. That's your morning market hit for Wednesday, 7th of October. Please do subscribe on YouTube. Simply search under ShortView Trading or follow us on Twitter, Facebook and or LinkedIn. Thank you for listening. Trade well.